Hello everyone, this is Paul Mann from Empire Wealth Management with your June 2015 economic update. In this month's video I'm going to talk about some of the major economic headlines from last month, and I'll give you some insight into what they might mean for the markets and for you as an investor. Greece dominated headlines last month as negotiators struggled to reach a deal between the indebted country and its European creditors. On the U.S. side, investors dealt with a Federal Reserve meeting as well as a better-than-expected May jobs report. In the month of June, Greece took center stage as negotiations over bailout money faltered, forcing Greek leaders to push the issue to voters in a referendum. Greek banks also shut down to prevent a run, also limiting ATM withdrawals to prevent panicked Greeks from pulling out all of their money. In the weeks ahead, we'll be watching for more news from Europe as the fallout from the Greek crisis starts to land. Though the situation may be a tragedy for Greeks, we don't expect to see any significant long-term issues in the United States. And there's two reasons for this. The first one, Greece is not a big contributor to the global economy, and the second reason, Greece has been in various stages of crisis for years. At this point, economists, investors, and government leaders are prepared as possible for the crisis. Though we can't predict the future, we believe that the effects of the Greek situation on the U.S. markets will be limited. We might see a short-term pullback as investors adjust to the uncertainty, but we can hope that attention will return to domestic fundamentals. The Federal Reserve Open Market Committee met in mid-June to discuss the current state of the economy. Though they didn't raise rates, Fed economists reiterated their commitment to the wait-and-see approach. We don't yet know when the Fed will begin raising interest rates, but a number of Wall Street experts are betting on a third quarter rate hike. Are rate expectations already baked into stock and bond markets? It's hard to know for certain, but the Fed has been doing a good job of laying the groundwork for future rate moves. So we can hope that markets won't overreact when rates do start to go up. Domestically, the economic picture is looking brighter. The economy created 280,000 new jobs in May, beating expectations. Though the unemployment rate ticked higher to 5.5%, it became as a result of more people looking for jobs, which is actually a good sign about the labor markets. The final number on Q1 economic growth showed that though the economy contracted in the first quarter, it only fell by 0.2%. This is better than expected and hopefully paves the way for a stronger second quarter. So far, estimates on Q2 growth ranges from about 2% to over 3.5%. Looking ahead, investors will be taking a close look at earnings report from the second quarter to see how U.S. companies did in the past 3 months. We'll also be delving into economic reports from the first half of the year. All told, we've got a lot of information coming at us in the next few weeks. As always, we're keeping a close eye on the markets and we'll update you as necessary. That's it for the June economic update. Please remember that nothing we talk about here is a recommendation. As always, if you have any questions or concerns about what we've discussed, or if you would like to discuss your personal financial situation, please give us a call at 480-422-8522. We'd be happy to speak with you.